you, boss.
Now, the central bank or the MPC members looked at 2018 with the field glasses and said, hold on a second, we see opportunities for us, quote unquote, to lower interest rate to become more dovish in 2018. Talk about the U.S. interest rate, talk about monetary easing, less bond debt buying by the European Central Bank and all of that, and begin to hinge 2018 monetary policy outlook on some of these risks. What's your take on that?
My take on that is I think we lost a very good opportunity to have lowered the rate and get the investing community, both the international investors and domestic, to be used to a lower rate ahead of 2018.
We missed that opportunity? Was it last Tuesday or the meeting in July?
I mean, the last Tuesday, I think we missed the opportunity in the last meeting.
We should have done that.
We should have, because going into 2018 is going to be more difficult. Number one, there's going to be, US is likely to raise rates, which means that there are going to be other investment outlets apart from Nigeria. Number two, we're likely to have pre-election spending, meaning that the system might be awash by liquidity, which meaning that the CBN will have to think about tightening again in order to prevent inflationary spiral. The last point I'll make on that 2018 what's it called now? Risk is perhaps the likelihood of member countries in both OPEC and non-OPEC calling Nigeria to be part of the oil deal. And if you're brought into the oil deal, your guess is as good as mine. It means that we cannot even be talking about having to increase our output of oil. So it could be capped, by my estimate, at 1.9 million barrels per day. By the way, budget of 2018 is inked on $2.3 million barrels per day, which I think we cannot get to, because once we're getting towards that end, OPEC might come.
OPEC is watching.
Yes.
Let's watch Abuja. Celestine, thanks for hanging in there. I hope you're getting some tea and coffee to keep you in there till 11 o'clock. Thank you very much. What's your take on these interest rate decisions last week, Tuesday, by the central bank?
Okay, as regards the interest rate decision, you would know that the bulk of the work I do is around small businesses, micro, small, medium enterprises. So whether the interest rate is going up or coming down, whether CBN is pegging it at 14 or not, really does not affect MSMEs for now, because access to finance still remains a very big challenge for us. People would say, oh, the World Bank Ease of Doing Business report said it has improved. What they looked at is some indicators in the area of credit bureaus that were established. They looked at the steps that would take to reduce, to make it easier to access finance. But in terms of being able to access the finance itself is still a challenge for many small businesses. So the interest rate has left the way it is still is not much of a concern to MSMEs, because at the end of it all, the question now is, can I get to access these funds? Can I get to apply for and get this fund? And the challenge for most of them is being able to structure the applications as is acceptable to this development finance institution or the commercial banks, which is still a very big challenge. So interest rate at 14% or at any percent is not the core concern for MSMEs. The concern for us is, let's sit down and begin to think through how we can make it easier for small businesses to access finance. What do we need to put in place? How do we, and also we need to understand what are the peculiarities of these MSMEs, so we don't bring out one intervention or one lending program that has a single guideline and everybody is struggling to fit into that guideline. We need to have a development plan that speaks to the ability to lend to every sector. What are the peculiarities for people who work in this sector, as again people who are in this sector? What are the things they need? I tell you, people are not too interested whether it's going to be 8% or 9% or 10%. All they want is, let me be able to access this finance, let me be able to access this funding. 40% is a good one. 18 is even a good one for most persons. But when you begin to put in conditionalities that will not allow me to access the funding, it becomes a big challenge. So we are not too keen on looking at what the interest rate is. Our challenge for now remains on what are the bottlenecks that needs to be removed so that MSMEs can apply for and receive this funding. And I will say something here again. I'm not for creation of new agencies. Now we have a DBN, Development Bank of Nigeria. We have a Bank of Industry, a Bank of Agriculture. We have several agencies, but the key challenge has not yet been spoken to, which is the bottlenecks, the conditions. We had the CBN intervention, 220 billion, that had a a 2% plus a markup of 7, making 9 maximum. 9%, but people are not assessing it because it came with a condition that says you have to pledge from 75% to 50% bank guarantee before you can access the fund. Now, if you tell me to pledge 50% bank guarantee to access a fund for bill, you are simply saying I should raise 50% of what I want to apply for, deposit it with the commercial bank, and then assess the 100% of it. That doesn't make sense to most business owners. So it's a bottleneck. If you look at the one they call the Youth Entrepreneurship Support Program, ESP, it said, with your discharge certificate, you can apply for and get loan from bank industry or CBN. But the challenge also was that the people we are bringing in as your guarantors were asked to pledge properties as collateral. Who wants to do that on your behalf? So we're not too bothered on whether it's going to be a 9% or a 10 or 14. We're asking that the bottlenecks, we all sit and discuss the bottlenecks.
Celestine, now we've gotten to the neck of the bottle. We need to take a break. When we come back, we'll get inside the bottle and see what lies in there. We have a lot more to discuss. Stick around, everyone. Give us 2 minutes. We'll be right back.